Hello and welcome to OAG's latest webinar, first one of 2025. It's far too late in the year. Strange to say that in February, but it's far too late to say Happy New Year. I suppose we could say Happy Chinese New Year, which was last week. Today we're going to talk about what has been emerging over the last year, probably a little bit longer, where airlines are having to are seeing capacity impacted, and we're speculating that that's creating a bit of enforced capacity discipline, largely because of circumstances that are to some extent beyond their control. So before we dive into the topic, though, I'd like to introduce our panel. Myself, I'm Deirdre Fulton. Those of you who join us regularly will know that I've been here for a while. I'm a partner in Midas Aviation, work closely with OAG. I'd also like to welcome back John Grant. Come back for another year, John.
John's OAG. I've missed you so long.
That's it. Haven't seen you for such a long time. Welcome back. And last, but by no means least, welcome back, Brendan. Brendan has been on our webinars before, but not for a while. So we're delighted to have him back. Brendan's independent analyst and consultant based in Singapore, and has really deep experience in a range of markets, including Asia, the Middle East, and Africa and the CIS. So welcome, Brendan.
Thank you. Great to be back.
Great. Okay, so as I gave you a hint, we're going to take a look at enforced capacity discipline, and our theory, our speculation is that we think this is impacting on growth this year. And to sort of explore that, we're going to take a look at the latest capacity position, how trends in inactive aircraft levels are emerging, and we're going to have a bit of a discussion around where we think this is geographically impacting. We also want to take a look at the low-cost sector and just understand some of the characteristics in that market and how that's evolving. And as ever, we'll throw in some snippets about what's happening in the industry. As usual, we'll take questions as we go, and please just use the chat function for that. And I'm hoping that my voice lasts for the duration of the webinar, but if it doesn't, I'm sure one of the other panel will step in and keep talking. Not that it's ever usually difficult to find things to talk about. Okay, so our first slide is the one that if you join us regularly, you'll be used to seeing. Global growth trends in capacity. So when we look at quarter one for 2025 against the same quarter last year, capacity is up 5.2%, and that's allowing for the fact that there was a leap year last year, so an extra day in February. So we've adjusted for that. Still chasing the elusive green line, which is if we'd had 5 years of growth in a normal world. Can't get through a webinar without a reference early on to the events that happened in 2020. But John, this is relatively upbeat, isn't it? Good position to be in at this point in the year.
It is, and of course, taking that leap year thing a stage further, of course, Easter this year will be in April, so that amount of additional capacity looks quite good on the face of it. As always, the devil's in the detail. If you look at some markets, they've been growing faster. Brendan can speak to the fact that Asia is still very much in a recovery mode, and we see that year on year with another 10 million seats being added back into Northeast Asia, for example. Southeast Asia, another 10 million seats being added compared to last year as well. So a lot of the capacity growth is happening there, and that accounts for probably 70% of that 5% growth, if that makes sense to anyone. So it's about the bounce back, and that's still continuing. And we've done some work in recent weeks where we've looked at selected markets in Asia, and you can see very big increases in capacity, because unfortunately, it's not a matter of production increasing by 3 or 4%. Another aircraft is 100, or frequency is 180 seats on average. So we're seeing capacity coming back. The consequence of that, though, using some of the infare data that we have, is that the average selling fares are falling quite significantly on those routes, which is good for travellers in Asia. But it is a bit of a warning about being careful about capacity discipline. Whereas in Europe, generally we are seeing a little bit of growth, and likewise in North America, but the net consequence of that is still very high airfares.
Okay, let's go on to our next slide, where we go down a level into the regions, and we're looking here at both capacity and frequency, just by those kind of summarized regional levels. Again, we've adjusted for the leap year in 2024, but interesting, isn't it? You've got different things going on in different parts of the world. So on the face of it, strong capacity growth in Europe, Asia, Latin America, sort of above that trend, but in the mature market in North America, slower, and the Middle East slightly slower, although I suspect there's still a bit of a legacy there in terms of the impact of capacity reductions in Israel, although we're starting to see that come back now.
Yeah, it's an interesting picture. I mean, the ones, all of those that are above average have got their own stories. Obviously, the ASPAC one is about still the rebuilding capacity. But one of the smallest ones, but one of the most interesting, is North Africa, where we've got this 7% increase in capacity, and slight reduction in number of frequencies. So obviously, someone is using larger aircraft, and that someone tends to be the low-cost airlines, and particularly European low-cost airlines, who are actively developing their positions in North Africa, particularly at this time of year when it's pretty chilly in London. Weekend break in Marrakesh or somewhere else in Morocco.
Sounds quite appealing.
Yeah, it sounds very appealing. And it's suddenly the place to go for a winter break is Morocco. So they've done very well in turning that round. And there's a new airport in Egypt, at Cairo, Sphinx Airport, that's seeing some low cost activity. So that in itself is quite interesting. Then you compare and contrast with North America, where there's some very real concerns about the longevity of the ultra low cost airline model, and where that is going, and where it will end up. Obviously, Spirit's still in Chapter 11. They've retrenched their network, dropped some markets, cutting staff, aircraft to be returned, recovery plan coming up, etc., etc. So that's a lot more of a cautious market, which is, it is the most mature market of the ones here. It was one of the first to recover. And in Europe, we're just, there are some strange behaviours in Europe we can see later, that one or two airlines are very aggressive in their capacity growth at the moment. So it's a fascinating picture. Latin America, we've got another potential merger going on there, 6% growth. And I think we don't talk about it very much here, Deirdre. One of the fascinating things is, last year, 2024, was supposed to be one of the most profitable years in the industry. And yet many airlines are struggling to be profitable. There are some very, very successful airlines. But they are, it's a hockey stick of cash crises, mergers, needs for consolidation, and a lack of profitability for many.
Brendan, from your perspective, obviously it's just been holiday season, still is to some extent in your part of the world. What is the sort of mood in the region? Is there optimism? Are people upbeat about the prognosis for the industry this year?
I think it's pretty mixed. We had Chinese New Year, just shortly after the end of the year holidays. So it was a pretty good January, but not as good as it was last January. John was mentioning airfares. Even if you look at Chinese New Year airfares, which are usually kind of peak airfares, they were a good amount below last year's Chinese New Year period. So that is, a concern, kind of an indication that things will be more challenging this year. Competition is intensifying, capacity is coming back into the market, albeit kind of slowly with the delivery delays and all these other issues we'll be talking about in a minute. The regional market, the short haul market, which is where the LCCs play in, is pretty challenging. We have higher supply than demand on many routes now, which wasn't the case and still isn't the case in the long haul market in other regions. So,
and that's an uncomfortable place to be, that, isn't it, for an airline?
Yeah, and it was happening pre-COVID, and it's starting to come back, but not to the same degree as it was pre-COVID. But costs are so much higher these days. So So if airfares are still higher than pre-COVID, even on these kind of routes where we have a lot of competition again, they're not sufficiently higher to cover the costs. So that's where you have the pressure on the financials of the airlines. And like what John was saying, some airlines are doing, accounting for all the profits globally, basically, and the others are kind of, fighting over peanuts, and or even in the red in some cases.
Yeah, it's a good point you make, Brendan, because as an industry, our go-to sort of metric of state of the industry and cost is to look at the price of oil, and we forget that the cost of labour has gone up in many markets by over 30% since 2019 and more, and aircraft lease costs have gone up considerably because of the supply chain challenges, and the cost of maintenance has gone up exponentially because if you can find a hangar, it's going to cost you a fortune. So it's the below the line cost perhaps that we probably never really appreciated or studied in great detail that are impacting everyone, I think.
Going to the
and that's before we talk about taxation.
Airport taxes too, and of course they affect low cost carriers more. They affect kind of the short haul players more because proportionally these costs are higher, while fuel is obviously a bigger cost for longer haul players. So these labor costs, these airport taxes, these airport costs, handling costs in Asia, particularly Singapore and Hong Kong, are up exponentially. For example, these can affect the short haul low cost carriers more than others.
So it's, in that context, it seems hard to imagine that sort of oversupply will hang around for very long.
Don't you believe it, Deirdre? Don't you believe it? This is an industry that's not very good at managing capacity.
Yeah. We can hope, we can wish for it. Okay, let's look at our next slide, which is setting out really some of the one of the reasons that is behind the challenges that some airlines are facing, and that's the level of inactive aircraft. So we saw this sort of emerge, didn't we, as we came out of the pandemic in terms of delays in the supply chain. We also obviously saw carriers impacted significantly by the Pratt & Whitney engine issue, and these issues continue to impact and rumble on. Just taking a quick look at the data earlier this week, 7.2% of the global fleet of commercial aircraft is recorded as inactive at the minute. So that's those aircraft that are out for maintenance and repair, not those in storage. And you can see, just looking at top level, at sort of continent level, there's a bit of a variation in that. Africa sort of worst affected, 11.4% out, but Europe and Southwest Pacific Oceania also significantly impacted. So this is not a good position to be in for carriers, although arguably maybe in Asia, if there's oversupply, then that's helping to manage that situation. But it's
And
not where you want to be, is it? It's not. You want to be able to maximize all of the resources at your disposal.
Deirdre, I think the point, in Oceania and the rest of the world, in fact, is what would the capacity position be if, a large part of this inactive fleet returned to market? The major carriers are always going to have a proportion of their fleet that is in maintenance and repair. It's a percentage, but it's not as high as what we're seeing here. And if this returns to the market, it's a flood of capacity that will occur at some point. When? Nobody knows. There was a hope that it would be back by the end of 2025. I now see that the expectation is it's going to go on for at least another 2 years. And airlines like Wizz Air are already making, noises to that effect. But I think it's also interesting when you get really down into a country by country basis. So you take Turkish Airlines, for example. Their capacity in the first quarter of this year is down by somewhere like 17% because of inactive aircraft and other requirements they have. So in Turkey, the national carrier is down in terms of capacity by 17%. Yet Pegasus, the largest low-cost airline in Turkey, have got nearly 20% more capacity operating this season. So they're being given, and basically Turkish Airlines are giving them the freedom of the market to go where they want and start expanding and growing as rapidly as they can. And there is a linkage between the two companies and the families, etc., etc. So whether it's conspired or not, there is only one winner. But then you look at Lufthansa. I mean, Lufthansa are in a terrible state at this moment in time in all sorts of ways. They are dragging the rest of the Lufthansa group down, and they're having to move aircraft from one base in Munich to Frankfurt and vice versa, so they can actually operate a program. So they're very much struggling with it. Indigo again, the largest recipient of A320s last year from Airbus. And they've got 66 inactive aircraft today. That's a lot of metal and a lot of revenue that they are leaving on the table. I mean, we calculated it literally could be millions of dollars that are being left by Indigo every month because of the inactivity of their fleet. And, that at this time of year, cash is king. And if they could have put those aircraft in the sky and generated revenue, I'm sure they would be. It's frustrating for everyone.
Yeah.
Brendan, who's suffering the most in Asia, do you think, at the moment?
Well, I mean, a lot when we're looking at this, we're kind of looking at the airlines that have the Pratt & Whitney and the engine issues kind of come top of the charts. But there's other issues out there that also have an impact on the capacity of airlines, including those in Asia. Delivery delays being one, of course, because if there's been an obvious slowdown in deliveries, and the Asian carriers tend to have proportionally more deliveries than airlines from other regions. And also you have those aircraft that are inactive, not because of MRO, but because they haven't come back post-COVID. So and you still have a lot of those airplanes lying around. AirAsia Group, for example, I mean, they still have over 40 aircraft inactive. I mean, including the stored ones that haven't been reactivated yet, as well as ones trapped in MRO. They don't have the Pratt & Whitney engine. They have the CFM engine, so they're not impacted like a Wizz or an Indigo, but they have a lot of other aircraft issues, even though they don't have the Pratt engine. So. And in Indonesia, you have all the airlines have a lot of inactive aircraft. Just the two main groups there alone, Garuda and Lion, they have over 100 aircraft inactive. Again, about half of them would be in this category of MRO. Half would be kind of more stored, more permanently or semi-permanently. Just one thing to point out with Turkish, I think that 17% capacity declines a bit exaggerated because of Anadolu Jet, because you had Anadolu Jet come out.
That moved.
But they do. Their fleet is down. They are one of the airlines impacted by these engine issues, obviously. But I think that 17% figures a little bit. It wouldn't be so high if you included Anadolu Jet, obviously.
Yeah, that's a good point.
Fleet Pegasus, and it continues to expand. So so that's I
Yeah,
mean,
yeah.
Brendan, going back to Indonesia, I mean, strikes me that it's a very large domestic market. The two major carriers or parents of other airlines, yet they can't be profitable, and they have never really operated with any degree of profitability. Is there just too much capacity, too many low airfares, and therefore, it's never going to be profitable until something breaks and rationalizes in the behavior in the market between the two airlines and the prices that they put out to sell?
Well, that was the problem pre-COVID, particularly 2018 and earlier, when the market peaked in 2018 with over 100 million domestic passengers in Indonesia. But 2019 declined, and we're still way below 2018 levels and still below 2019 levels as well. So we're 20%, depending on if you measure the peak as 2018 or 2019, or we're like 20% below the peak. And that's because there has been kind of capacity discipline between the two main groups, and then post-COVID, they've had aircraft issues, so it makes it even harder to go back to 2018, even if they wanted to. But they're probably quite happy to sit on the lower capacity that they have now still, and that market is doing quite well, compared to the other markets. I think. Thailand is also doing quite well right now. You have capacity discipline there, but look at other markets like Malaysia. They're kind of killing each other again. So it's like back to where it was.
Okay, let's move on to our next slide, where we sort of want to take a bit of a step back and look at low-cost capacity growth by region over the last decade. So what we've seen, just looking back from back to 2015 against last year, low-cost carrier capacity has grown at 5.9% on average each year. As we saw with current capacity trends, there are different dynamics and different things going on. Interesting that the Middle East has seen significant growth above the global trend, and that's about what's happening and what's happened if we think back over 10 years with the growth of Fly Dubai, the Saudi low-cost carriers, Air Arabia, a number of carriers that have emerged and really cemented their positions in that last decade. Africa as well. John, you referenced what's going on in the market there, and continued strong growth in Europe, which is interesting in what feels like a relatively mature market. And I think in our coming slides we'll explore some of that. What I wanted to do a sort of sense check on as well was, so to what extent have low-cost carriers taken market share in their respective regions? And so you can see what low-cost carriers accounted for back in 2015 and what they now account for in 2024. So, that both actually Africa and the Middle East, relatively small shares at the outset. Africa really hasn't quite taken off. Bad pun. And this, it's worth noting that this is domiciled African carriers, so we wouldn't see the impact of overseas European-based carriers driving these shares. But some significant gains in Europe, which is about what we've seen happen with the legacy airlines in Europe. And sort of steadier growth as we know in the mature market in the US. So yeah, so some interesting.
Africa's always going to struggle, just purely because of the whole issue of taxation and the fact that most governments still see air travel as a luxury product. And to Brendan's earlier point, in terms of proportionality, it becomes a very expensive part of the whole airfare. leaves little margin for the airline. And then in Europe, of course, the legacy carriers, and the network carriers all have their own low-cost airlines that they've created because they know they cannot compete on the cost basis and the productivity that's required in that particular segment. The Middle East, I think, is fascinating because really that's about filling the gaps in the networks that were available from the Middle East that couldn't support wide-body capacity. A lot of airlines in the Middle East 10 years ago, the legacy carriers essentially had fleets that were primarily wide-bodied and didn't have the right aircraft to operate those low-cost sectors to secondary markets. And since they've come on, and Flydubai is a great example, it's created markets to tier 2 airports in the region and now further afield in Central Asia and even into Europe. And at some point they will transition or be operated in partnership with Emirates. So you'll have a mix of a low-cost carrier and a legacy carrier, and they'll be driving connectivity through their respective hubs. North America is the fascinating one because in every other market there are destination opportunities. If you look at Ryanair, they're always finding new markets. Wizz Air, always finding new markets. You look in Latin America, there's always a new market. In the Middle East, there's hundreds of potential new markets. In North America, the actual opportunity for new market development is actually quite limited. And that's what's driven what we see now in terms of the performance of the low-cost sector, because they cannot find new markets where they are developing a market rather than competing against a legacy carrier with a hub or multiple hubs and higher frequency through those hubs. So it's become extremely challenging in the North American market. And they've been slow in the ancillary revenue game as well. They've not been as quick to catch on to the potential ancillary revenues that could be created from the passenger, like Wizz Air and Ryanair, and indeed Jet2 are in Europe. So it's there's a lot of learnings that can be taken from each region, but the one I feel sorry for is Africa because it has so much opportunity, but tax just destroys it.
Feels like we've been seeing that for a very long time, doesn't it? A decade at least. But I'm still optimistic. Yeah. I'm still optimistic that there's I think ultimately population growth and liberalization. Population growth will drive it, won't it? And liberalization will have to come.
But it
feels like we're still
the Yamamoto Agreement. How many decades old is that? They should be retiring that because it's been in existence for so long. And subsequently, every aviation minister is a signatory to an agreement about open skies or liberalisation, and nothing happens, or nothing dramatic happens, nothing significant happens that changes the broader landscape.
It's really difficult, though, isn't it? But particularly, and you could slightly different, but you could ask the same question about ASEAN and the extent to which that has moved things on in your part of the world, Brendan. I think what's really interesting is what we saw coming out of the pandemic was a shift back to a much more nationalistic perspective and viewpoint, and we've seen that in shifts in governments right across a whole range of countries. And so the premise of open skies, a global journey towards liberalization is kind of not the landscape really in a lot of large markets at the minute. So there's that layer as well, isn't there, in terms of how carriers can pursue growth. And we could probably spend a whole webinar talking about the mechanisms that have been used in different countries. But yeah, interesting position. Let's take a quick look at the next slide, which takes us down a level to just look at the capacity growth at some country markets. And I'm just trying to find, seem to have lost my window. Oh, there it is. technical difficulty there. So what we've done is sort of just gone down a level to look at the largest top 20 country markets by LCC. And just in this very small chart on the bottom left, attempted to show the kind of trajectory of growth that's happened in the LCC market. So 2015, 2019, and then 2024, and the percentage here is the growth in that market versus 2015. So it's sort of belies what we saw in the previous slide, didn't it? Doesn't it, in terms of 15% growth in Saudi Arabia, strong growth in the Mexican LCC market, China, India, of course. And the one that was kind of interesting, although I suppose this is looking back over a decade, is Germany. I think, again, probably enough to say, to cover a whole webinar to talk about what's happened in the German market. But if you think back to 10 years ago, the market was in a really different position in terms of the growth and development of low-cost carriers. And that's, the world has changed there. Interestingly, Brendan.
Challenge is, Deirdre, how does Germany get out of this downward spiral, and how does it change the market's perceptions? Is this because of regulatory issues and sustainability and imposition of carbon taxes, etc.? Is this just the economic woes of the country, or is there something more fundamental going on? Leakage across borders into other markets, etc. It was a powerhouse of Europe. It was a leading example of strong market growth in the tier 2 airports. It was 10 years ago. It was a best case example. Today, it's like, it's a bit rancid.
Yeah. Maybe we'll come back to the ups and downs.
Brendan, the one that always intrigues me is the Philippines, because I think potentially it's a huge market, and Philippine Airlines are now on one of their ambitious growth trajectories, aren't they? Where they're going to start flying everywhere again, connections to the US, etc. Is it a new opportunity, or is it just another go round the circle?
There's definitely relatively more opportunity in the Philippines than some of the other ASEAN markets. You have more of discipline in the Philippines, with Philippine Airlines and Cebu Pacific, controlling most of the market. You have a higher, economic growth, the economic growth and the middle class growth, the discretionary income growth, and all that stuff that drives LCC growth has been higher and kind of later in coming than some of the other ASEAN countries, I would say. So there's a lot of good things happening there economically. You have two relatively strong airline groups. Cebu Pacific has always been strong, and PAL is a lot stronger than it used to be, after the Chapter 11 process, although still has, I guess, some legacy issues. So it's a very good market. And of course, geographically, the Philippines, with the the islands geography, is perfect for short haul flights. So there's really no other option. So it is definitely, I would say, one of the better markets at the moment. You have markets like Malaysia that's, as you can see, because they were still below 2019 levels last year. They're barely last year, they're barely above 10 years ago levels. Also, a lot of the growth in the other ASEAN countries, including Malaysia, were earlier than maybe 2014, especially from a penetration rate level in terms of where the market share gains happened. It was earlier. So, and you saw from the previous slide, Asia overall, is kind of has a low penetration rate, and it hasn't picked up too much. But of course, that's dragged down by North Asia, particularly China. Southeast Asia has a high penetration rate, about 50% for domestic and regional, but has already had that for a decade. So it's not. It was more an earlier phenomenon, and then you have some markets like the Philippines, where I think the growth is potential is higher than a market like Malaysia, for example. So it's really about where they are in the growth cycle compared to, say, where they are in the penetration rate cycle, which is Southeast Asia already being one of the higher regions. It's there's not much.
And of course, China has doesn't have low cost airlines; they have low fare airlines.
Yeah,
which is a subtle spin on it. But and of course, there are some low cost international carriers that operate into China. Will they really ever embrace the concept of low cost or low cost carriers as we see them in the rest of the world, or is that what we should expect to see forever?
I mean, I think it's just a different market. I mean, you have Spring as a true low cost carrier there, and that's about it. And then you have some other smaller carriers that are owned by some of the other groups that might count as LCCs, but are very small and are more hybrid. And then all the other airlines are basically, they have relatively low cost structure. They're definitely low fare airlines, not only domestically, but they're dumping fares in the international market now as well, which is making it hard for anybody to compete. Compounded by the airspace issues with Russia, of course, but Chinese carriers are just going to be dominating the international market. So it's just a different market, I would say. I mean, there's a lot of caveats with LCCs these days. I mean, you mentioned Fly2Buy earlier. They're hardly LCC these days either. Yeah. So it's there's all sorts of kind of airlines in between, and it's harder and harder to find some of these and whether to count them as LCC or not LCC in the databases. So it's
much harder to distinguish, isn't it, in those kind of clear categories that we like to put things into boxes. You've got,
and we like the world to be tiny, don't we? So we like a low cost segment clearly defined, and we like the legacy segment clearly defined. And there is this cluster of hybrids now. And strikes me that is a really, really dangerous place to be unless you have a very wealthy parent or a relationship with a very wealthy parent airline that has that vision and sees it as part of a wider strategy. For Fly2Buy, I can see it makes sense because it's pushing itself towards Emirates and its product consistency and all of these sort of things. But for JetBlue, I mean, that's a dangerous space to play, guys, particularly when you start doing transatlantic or the once or twice daily frequency to London. I mean, you're putting yourself right in a lion's den there against some very, very strong carriers who will defend their position and their share ferociously. And this time of year, can you actually make it work? That's a real concern. And then, of course, can't help but look at some of the low-cost long-haul carriers and question whether that's the market as well. And we'll come on to that in a bit. I know, Deirdre, we've got some data. But the more the market fragments, it's only a matter of time. And with the wisdom of age, we know that something will break somewhere and something will pull things away from each other again.
I think the nature of the industry, though, is there will always be this sort of tension between well-established groups that, and you see that right across Asia, don't you, in terms of the airline landscape, where you've got different products catering to different audiences and different markets within the same airline group. And is there a better outcome in terms of profitability and from a passenger perspective than the sort of more classic low-cost carrier that emerges out of it is kind of has low cost in its DNA and doesn't have any kind of legacy issues or any historic issues, and I think the jury's out, isn't it? Because some of that is just about responding to different markets and how they behave and perform.
Yes.
But that's a question for Africa, isn't it, in terms of the development of LCC and to some extent in Latin America. It's in the sort of in the big white spaces there where markets are not yet penetrated by low cost carriers. It's which is the right model to pursue to have a sustainable operation.
The four most dangerous words and phrase from a new airline CEO is there is a gap in the market. Because what that means is there's a very big hole and you're just about to go in it. You know, and that is not the same as a gap in the market. And, you know, there's the greatest example at the moment probably is this one A380 operator in the United Kingdom who professes that he spotted a gap in the market and still can't find anywhere to actually put the gap, which is quite fascinating. And I think that's the danger. You know, the market may have gaps, but quite frequently they're potholes.
I mean, we were talking about Africa. You mentioned Latin America as well. So these markets, these regional international markets, you know, it's just the cost, the taxes, the airport costs. It's the same thing in Central Asia, the Caucasus, CIS region too. You can have it works in domestic, but once you do the short haul international, it doesn't work, and it won't work until there's liberalization, until the costs come down to a reasonable level. So in Africa, have South Africa domestic, and that's about it. Then all the regional international, that's why you have such a low penetration rate by the African carriers. Because only South Africa has a size of the domestic market. Latin America, of course, you dominated by, like a Brazil domestic market. But then you look at the regional international market in Latin America, always been a struggle because of these. Again, it's a very high taxed, high cost market. Central Asia, Caucasus is another example. In Asia, it's not as bad, but it depends on the market. Certainly in ASEAN, the low cost carriers have successfully penetrated that regional international market. Certainly they have in Europe. And EU being one market helps a lot. So in North America, you have domestic. US is so massive, you don't have to worry so much about regional international.
The data on the previous slide where we showed growth in particular markets, Brazil has no growth in the low cost carrier share for the last 10 years, 0.
Yeah.
And that says it all about how difficult it is, because if there was a successful low-cost airline in Brazil, it would be growing its share of the market, full stop. Okay,
Let's move on to our next slide, where some of this data I think will, substantiate what we were saying. What we've done is we've taken average sector length, again, just by region at this on this slide, and looked at how that has evolved over the last, the last decade, so 15, 19 and 24. Again, growth percentage here is versus 2015. So you can see that, as we were just saying, there has been very little change in those sector lengths operated by LCCs in North America. By contrast, there's a different story in different geographies about carriers having to fly longer sectors, partly because of competition, partly, I guess, enabled by fleet choices, and it'll be interesting, I think, once we see many more A321 XLRs flying around, to reframe and look back at how that allows carriers to develop and evolve. But interesting, and interesting to see those variances. And again, this is based on domiciled African domiciled carriers.
But then again, Deirdre, this again highlights the issue in North America. The fact that, it is a geographically constrained, finite size market. And whereas in the Middle East, and with these XLRs that are coming online everywhere, you can see that Middle East growth and average sector length stretching further and further out as they connect points in Africa and Central Asia and, secondary Russian cities as well over time, and within the Indian subcontinent. You can see in Latin America opportunities for a bridgehead from the northeast of Brazil into Lisbon and Portugal and other such points. Europe just keeps growing. ASPAC, Brendan can speak better too. And Africa, there's opportunity. But North America is just like, guys, we're stuck.
Where do we go?
Like we're stuck with Donald and we're stuck with our geography.
Yeah.
It is a market dynamic kind of thing. I mean, So with Asia, you have, a lot of low-hanging fruit was done for, 2014, before 2014. Same with the Middle East. I think, LCCs were quite in their infancy 10 years ago in the Middle East, and they were only doing, the regional domestic stuff. So naturally that kind of gets saturated, and then you look longer afield. Plus you have NEOs. I mean, LR's not going to come up really too much impact in 2024 yet. They will in the next decade with XLRs as well. But of course you have just the CO2, the NEO leap has created extra range, and you see a lot of airlines pushing out from 4 to 5 hours, and it just, again, the geography. I mean, all that low-hanging short-haul fruit was taken in the earlier period. So really, these guys are going after some of the medium-haul markets now. Well, North America, a mature market. Africa, extremely low base, so I would kind of, discount some of that anyway, because there's so few African domiciled LCCs to begin with.
Yeah. Okay, let's take a look at the next slide, which is where we're looking at the top 3 LCCs in just 3 regions here. So what we've done is looked at this is based on capacity in 2024 across each of the carriers. So in this slide, we've got Asia, Indigo, Lion Air and AirAsia. And what we're showing is the proportion of capacity that operates on these different sector lengths. For North America, we've got the 4 LCCs, and obviously you've got differential there that we'll come to in a minute, and then in Europe we're looking at Ryanair, EasyJet and Wizz, and I think this kind of just encapsulates some of those different choices in strategy and direction, doesn't it? There are some things that just really stick out in terms of this for Wizz Air. This is about pursuing new markets, isn't it? And there's, on the one hand, there's cost associated with longer sector lengths, but Wizz have a model that appears to be working, don't they? And they're finding new markets.
It depends how your network shapes up, isn't it? Because I mean, a lot of that Wizz Air stuff flies at the most unconsumer friendly time of day possible, at 2 o'clock in the morning or whatever it happens to be. But from the perspective of aircraft utilization and productivity, is really quite beneficial. Whereas EasyJet, 50% of their flying is less than 12,000 kilometers or something, less than 1,000 kilometers. That is about highly efficient, optimal scheduling where possible, and serving in many cases business travelers as much as they serve leisure travelers. So that works very well for them. And then you turn your attention to North America. Well, Southwest have always been true to their word about bus stop type services and those relatively short haul sectors. They don't play in anything near as many long haul sectors as other carriers, some of whom perhaps are being forced into that JetBlue number. I mean, obviously that includes their transatlantic flights, which are right at the end of the spectrum. But I think it's, some people are going, it's the adoption of different strategies, and it's a bit like one of the things that was noticeable as we came out of the pandemic was the difference between how EasyJet and Ryanair used their fleet in the recovery process. Ryanair flew most of their aircraft at least one sector a day to keep them operational, whereas EasyJet adopted a different approach, which was minimize the number of aircraft you use, maximize the utilization you get out of those aircraft you do fly. Very different strategies, and we see that in the networks that are being created. And of course, if you're late to the market, then sometimes you've got no choice but to fly further and faster.
And I think it's really just about the airline strategy and the particular country these airlines are based in. I mean, you picked Lion, but Lion is very much because they're one of the larger airlines in Asia, obviously, but they're very domestic. They hardly do any international, with the exception of a few Hajj, Umrah kind of operation in Saudi Arabia using their wide bodies, but everything else is very short. Indigo has only gotten into kind of the longer sectors quite recently. They're operating now to like Bali, for example, which is a long flight from India, like 5 hours. As they get more of the new technology, you'll see more of that. AirAsia's the story is a bit different with AirAsia just because they have AirAsia X, of course, doing the wide body long haul stuff. So they had this rule until quite recently about not operating over 4 hours at AK AirAsia because everything over 4 hours used to be AirAsia X. Now that rule has been dropped, thankfully. It's a silly rule to begin with, and now you have AirAsia pushing into some longer sectors, and you'll continue to see that, particularly once they get the LRs and the XLRs, which they don't have yet. So, it just depends. Wizz also has different. In Europe has different geography. In East Europe, going in, they can reach a lot of different places than maybe somebody who's more west.
I mean, those type of artificial rules are really interesting. I mean, I remember in my network planning days, we never want to fly more than a 2 hour sector. That's just not effective, efficient. We can't do that sort of thing. And then someone looks at a market and thinks, it's 2 hours, 15 minutes. Oh, well, we'll fly that. It's only another 15 minutes. And suddenly you're back into 3 hour sectors and you think, oh no, hang on, we want to get back to 2 hours. It's amazing how a CEO and a planning department's mindset can be adjusted depending upon the flavour of the day.
And that's always going to be a feature, isn't it? It's multi-layered, and there are things. Network decisions are driven by a whole raft of factors, aren't they? Geography, relationships, markets. There's a whole mix of drivers behind.
We've got lots of questions about Jambo Jet and Sky, who are the African attempts at low-cost carriers. The other part of being a good or even surviving as a low-cost carrier is critical mass, and critical mass in fleet, network scale, productivity, etc., etc. And that's the challenge in Africa, as much as anything, is getting that mass, and having ownership across a number of countries and operating in a region rather than a specific country helps. But you still got to get the network mass, and you still got to get the aircraft fleet so you can drive productivity. So, good luck to them. They've got some good ownership and some good management, but it's a tough journey for them to keep going.
Yeah, maybe scope for a future webinar topic. Yeah. There seems to be interest in the comments. So, what we're always trying to achieve in these is and we can only ever sort of try and cover as a snapshot of either a whole collection of markets. And generally we tend to fall into the trap of covering the bigger ones because they're sort of easier to manipulate and manage. So we're always open to suggestions for topics or geographies to cover. So noted on that particular point. I think let's move on to our last slide, which is just a little bit of a roundup of what's happening in the industry at the moment in terms of the airline landscape. So, John, where do you want to start?
We are week 6 of 2025, and yet there is so much that's happened already and will. I think, for me, one of the key themes is we seem to be in a year of consolidation and mergers and acquisitions, some of which are enforced, some of which, have been under consideration for quite some period of time. And I think, it's going to be a fascinating year. You look at some of the numbers for 2024 from the legacy airlines, the likes of United and Delta as well, and apparently IAG, will produce some stellar results at the end of the month. It's interesting that they have done very well, and yet some of those are carrying some immense debt. I didn't realize until yesterday that American Airlines are carrying $30 billion of debt. You know, that's a lot to carry. So I think that's interesting where that's going to go. Last week, we heard about Frontier making another approach to Spirit. You know, jilted once. What's going to happen this time? Spirit tried to go with JetBlue. That got rejected in a new administration. Would something like this see its way through? Is it a distraction for Spirit as they're in Chapter 11? You know, they're creating their own way through this. Lufthansa, we touched upon. I mean, they must be so pleased to have finally got hold of ITA. No one else wanted them, but that's another story. And now they've got 10% in share in Air Baltic. Makes sense for Lufthansa. They'd lost SAS, and they need a bit more presence in that part of Europe. But how do they find their way out of it? TAP up for sale. I couldn't help but put, could someone pour water on the opportunity? Looks like IAG are well set for that. Golden Azul, definitely a merger of necessity. If you look at the numbers, the networks, their performance, their financial losses in the last couple of years, you know, it's been horrendous. And maybe the mix of a quite regional niche Azul network with Gulls will make sense. China's airlines continue to build on European frequency. Brendan, you touched on this point. I mean, they're flooding Europe, 16% more flights this summer. They're flying secondary markets to secondary markets, flying over Russian airspace, lower cost. Will European airlines ever return to China in the way that they previously served it? I doubt it. And the reason we're seeing all of that capacity is because the Chinese US market is completely grounded. Summer 2019, 10,400 scheduled flights. This summer, 2,900. 73% reduction in movements. You know, it's not very often that we've seen these types of changes and reductions in frequency between two major trading nations in the world. And I think that's a fascinating picture to watch and see how that evolves over the next couple of years, because clearly there's not much appetite from the US airlines to expand their footprint in China, but the Chinese carriers are desperate for US dollars. How do you see that playing out, Brendan, from your Asian perspective for China-US market?
Well, first of all, it's good news for the indirect carriers, the North Asian carriers.
Yeah, Incheon.
Incheon, Hong Kong, Tokyo, because I mean the demand is obviously softer than it was because of all these economic issues, but it's, you know, you still have a lot of ethnic traffic, a lot of student traffic continues to flow between the U.S. and China, and they, because of the limited and very high fares on the nonstops, the North Asian hub carriers benefit. That actually has a knock-on positive effect for Southeast Asian carriers and other airlines, because what used to happen is a lot of dumping of very low fares in the Southeast Asia U.S. market by the North Asian carriers, but because there's opportunity to take on more China passengers because of the lack of capacity and nonstop capacity, they can take more of those, and that means less aggressive competition, although it is starting to come back to some extent in the likes of Philippines and Vietnam, and that's why you see you know, the long haul market continue to remain relatively strong. Maybe not as strong as it was a year or two ago, but still relatively strong. Philippine Airlines, for example, doing very well still in the U.S. market, partly because of this. The North Asian competition is coming back. We
had a query from a journalist yesterday who asked about the growth in traffic from China via hubs in Asia, and I pulled some numbers, and this is comparing 2024 to 2019. So thanks for reminding me. Haneda in 2024 had 1.5 million transit passengers from Asia to North America. In 2019, it only had 682, so it's got 1 million more passengers. Now, part of that is because they've, you know, worked on developing Haneda's network to allow more connectivity, and US carriers have moved flights from Narita to Haneda. But that's quite fascinating. Ironically, in Hong Kong, they are 2024 were 1 million connecting passengers lower than 2019. And I think that's because the recovery.
Yeah, I mean, the Cathay's US capacity is coming up. There's a pretty big jump this summer compared to last summer. So I think we'll see some of that return.
It will come back.
But again, like that has impacted the Southeast Asia market as well. The CX was a big player, still is, but with less capacity to the US, they haven't been in the initial few years.
Which takes us back to that point of they had capacity discipline, be it enforced or otherwise. And in 60 minutes, we've gone around the whole subject and we're back at enforced capacity.
Back to the start.
Yeah.
Nicely done. Nicely done. We're out of time, I'm afraid. So thank you both for sharing your insights. And thanks to all of you in the audience for your insightful questions. There will be a copy of the slide deck and a recording winging its way to you later on today. And it just remains for me to say thank you very much to Brendan for joining us, and John, as ever, thanks for your thoughts.
You're welcome. Good, well done with the voice as well, Deirdre.
It lasted, yeah. Might not last the rest of the day.
Oh.
Thanks,
Right,
everybody.
thank you.
Okay, thank you.
Thanks, Brendan.